people are getting concerned about quantum. When you look at the facts, when you look at the progress, this isn't something that merits any sort of existential risk to Bitcoin. The biggest risk is Bitcoin consensus. We're going to get Jarvis in Iron Man at some point. And like all that means is we're going to have an operating system level AI native resource. And Claudebot comes out of nowhere and here, give it root access. And it's going to go viral because of everything it can do and the security implications. A lot of people are going to get totally screwed from running this. This is the inflection point, and I feel like we're now starting to truly enter like an AI native future.
You still feel that Bitcoin is the most important innovation that we've seen since we've been alive?
Absolutely. Like AI is going to impact productivity, but if we can create the first neutral monetary system for the world, and that neutrality is something that'll indirectly benefit everything else, because now it's like, well, what do we focus our time on? What Bitcoin's changing is not making things more efficient with how we're incentivized today. Bitcoin's benefiting us by changing how we are incentivized. And that's what I think is going to make it the most foundational technology in our lifetimes.
Hello, everybody, and welcome back to the Bitcoin News Channel. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Eric Yakes, founder of Epoch Ventures, author of The Seventh Property, and lead architect behind the State of the Bitcoin Ecosystem 2026 report. Eric, how are we doing today?
I'm ready to rock, man. It's dark times in the market, but that's fun times for me. This is where opportunity lies. It is where dreams are made.
Cannot get scared. You've been around enough to know that this is when the real growth opportunities appear, and you got to be ready and primed for when they do. So yes, you just put out this great 186-page report, as you do every year now for the last 2 years. And I've been diving into it, and there's plenty to explore here. And so before we get started with the numbers and the charts and the graphs, you in the intro said that Bitcoin arrived precisely when it was needed, and that the ecosystem aligns almost eerily well with your personal values. So on a personal level, how does Bitcoin align with your values?
Bitcoin's freedom. Living is to be free. Living is to make your own decisions and do what you want to do. It's what makes us human. Having that agency in your life, that's been taken away from money. That's taken away a lot of agency for the individual within a society, and Bitcoin brings that back. And that's what's aligned with, my personal values on it. I think it makes the world better.
Yes, it absolutely does. And you said that Epoch was founded on the belief that Bitcoin as a neutral global monetary system will be the most important innovation in our lifetimes. We are in the middle of an AI boom. The world is changing very quickly. Do you still feel that Bitcoin is the most important innovation that we've seen since we've been alive?
Absolutely. Like AI is going to impact productivity, and productivity, it'll be massive. It's very direct. I think if you take a step back, what makes something easy for people to understand is when the cause and effect relationship that it has is something that's very direct to them. It's very visible. It's tangible. What makes money something that is hard to understand is because its impacts are not direct. They're often indirect in our lives. They affect us in all these different indirect ways of what's happening with the money and how does inflation hurt us and where is it coming from in our money supply. And it's the indirectness that makes it hard for people to even understand the problem in the first place. And it's the indirectness that is also that will bring a lot of the benefits, because the argument is that if we can create like the first neutral monetary system for the world, then we're not going to have a monetary system that is being manipulated with political bias or, causing geopolitical situations. We're just going to have a money that's fixed. It's known, everybody uses it, and the market reacts to it. But you're not able to influence it to your own benefit if you're one country or another. And that neutrality is something that'll indirectly benefit everything else, because now it's like, well, what do we focus our time on? If we can't control the money supply, then are we going to be spending all of these political resources in order to do that? What does it mean for geopolitics? Do we need to control all these different countries if we can't force them to use dollars in the first place? And what does that time and capital get spent on instead? And and I think that's the argument of like, well, what causes a renaissance within a society? And it's like very long-term productive forms of capital and thinking. And that's what I think is that the effects of Bitcoin and its benefits won't necessarily be directly felt in the near term. It'll bring upon a new age of high productivity and proper orchestration of our resources, so that we're actually doing things that people want and that they desire. Like AI helps us do things more efficiently within how we're incentivized to behave today. That can be a good thing and a bad thing. So what Bitcoin's changing is not making things more efficient with how we're incentivized today. Bitcoin's benefiting us by changing how we are incentivized. And that's what's going to bring all the benefits. And that's what I think is going to make it the most foundational technology in our lifetimes.
It's even higher up the stream than AI. I love it. All right. So you put together this huge report. Tell us, what is Epoch Ventures and what goes into making a piece like this on a yearly basis?
We're a venture capital fund. We're investing in Bitcoin startups at the early stages. Our belief is that as this new neutral monetary system for Bitcoin is built, that there's so much that needs to be built to make that a reality, so that people can acquire Bitcoin all over the world whenever they want. They can store it all over the world wherever they want, and they can send it to people all over the world wherever they want. And there's a ton of different types of companies that are all associated with making that happen. A lot of these companies are companies that plug Bitcoin into the traditional system, and a lot of these companies are building out a new system that's operating on Bitcoin. So we're looking at, custodians, cross-border payment settlement, mining companies, hardware companies, middleware software companies that allow Bitcoin to like plug into banks. There's all these different things that we're looking at. And the reason that, we founded it was because I think it's what's needed within Bitcoin. We need capital to be attracted to these types of companies to build the system. And if Bitcoin goes where we know it's going, that these companies are going to be very valuable for that. And yeah, so that was kind of why we launched it. And then we write this annual report. Like when I was starting this, I realized, like, from the world that I came from, I used to work for a private equity fund before I got into Bitcoin, and I looked at a lot of different industries and markets. And you would typically have some sort of primer on the industry if you wanted to learn about something new. It's like, I want to go learn about the semiconductor industry. And you'd be like, okay, well, this investment bank wrote this huge, detailed, deep dive that'll tell you everything you need to know to understand how big it is, who the key players are, who the competitors are, all this different stuff. That's what we want to do for Bitcoin. We're like, that doesn't exist for Bitcoin. We want our firm to be putting out research completely for free, no strings attached. Just something that is good for us and our brand. It helps people better understand what's valuable about this industry, and increases information transparency throughout that helps us become more intelligent about what we're doing as a whole. So we viewed it as good, and it's our selfish benefit to where it helps us as a firm as well, so people are aware of what we're doing. And yeah, so it's just like a win-win. And when we were like, okay, nobody does this big comprehensive research report, we're like, okay, well, I guess we'll do that. And we've done it for 2 years in a row. It's great. It helps us refine our thinking on different things. And a lot of it's stuff that we're not typically looking at as a venture firm, and it's not as much relevant to our businesses, but people want to hear it. And it's good for us to talk about. That's typically like price, or talking about the Bitcoin Treasury companies or things like that. But it's good stuff, and we like to put together the charts so that people can see all these different angles and have like a really comprehensive source that you can point to. I was talking to somebody who read the report recently, and they're like, I always want to, when I'm explaining Bitcoin to people, I always want to send them this one chart that I saw somewhere and I can't remember where I saw it and I can't go find it. And they're like, now your report is a resource that I know I can just go to your report and it's probably going to have that chart in it.
A one-stop shop for all the information going on in Bitcoin right now. Well, you start off about price and cycles, of course, and you declare the end of the 4-year cycle, saying that it's a relic of the past and that Bitcoin is now growing gradually. Well, we are in quite the not so gradual moment right now, where we're seeing a lot of volatility and it moving rapidly to the downside. So the 4-year cycle kind of lined up with the peak in October and what we're seeing right now. Do you stand by those words that the
It's true. I don't think that like the narrative could be fulfilling itself still. But like these things aren't real. Markets are just like dynamic, and people come up with models for things that eventually just get broken. It could be lining up, but I think the argument against that is that we've been in a bear market for a while now. And we really didn't even have a bull market if that's the case. And in which case it really isn't all that much of a cycle. And it could just be like this very extended move upward that is going to continue at some point as well. Like we'll see how the cards fall, but I don't think that the idea that a cycle is some sort of fundamental thing that needs to exist, other than it being a self-fulfilling prophecy because of like unsophisticated market participants that are enabling it through a narrative. I don't think it exists in any form other than that.
So then let's dive into 2025 actually having been a bear market. If we price it in gold, then it is, right? We peaked back in November of 24 after the election. And since then, we've been gliding down when priced in gold. Do you think that this is a problem? And what's your analysis of the gold bear market?
No, I think it's good. I think it's good that gold is going up in value. If we take a step back and we say, what drives large pools of capital to want to own Bitcoin over the long run, it comes down to large macro variables as a significant aspect of it, if not at this point in time, the most significant aspect of it. So what's driving people to want to own commodities? And this, that story started a decade ago with this fracturing of the geopolitical system to where people want to own less, fiat sovereign debt assets, and, nations around the world are saying, okay, we want to start increasing our allocation of commodities. Why? Because you don't have to trust somebody when you own a commodity. You do have to trust somebody when you own their debt. And we've been witnessing this fracturing of the system. Trust is eroding in the system. People are owning more commodities because of it. And then over this past year, with that, this long-term shift being paired with the more immediate shift towards hardware and compute, we've basically seen everything in the periodic table has been going up in price. So it's turned into a little bit, a large bit of a euphoric market narrative. And we're seeing parabolic price charts and large crashes coming out of it. That narrative is something that is good for Bitcoin. That is something that is basically increasing the market size of Bitcoin's growth in the near term. So when I think about gold going up, I think, oh, cool, that's a larger market of value for gold that eventually Bitcoin is going to consume the majority of. And that's a good thing. And that's why in our report, we are identifying that we expect this coming year to have a large gold rotation into Bitcoin at a certain point. Like whether or not you can identify that or not is hard to say. But what we say in the report is at least like the ratio of gold to Bitcoin is going to go up, 50%. And I definitely think that that'll still be the case. So it's good. What holds people back from owning Bitcoin versus gold today is just like Bitcoin is still very young. Bitcoin has all of these characteristics that are superior to gold. You can store it trustlessly. If you're a nation state, that's who's buying. It's all these central banks around the world. If you're a nation state and you want to own a scarce reserve asset that you don't have to trust anybody over, then you want to be able to store it yourself. You want to be able to move it very easily. And you don't want to have to verify by cutting a bunch of gold bars open. Bitcoin does all of that in an automated fashion. It's far superior to gold in every respect when it comes to the verification of it, the transportation of it, the storage of it. Where does Bitcoin fall short against gold? It's because it's just not as big as gold yet. So its capital markets don't have the same depth of liquidity. If I'm Saudi Arabia and I want to go liquidate $200 billion of a sovereign reserve asset, then doing that in Bitcoin is going to drastically move the market. But you could do that in gold because the market's just so much larger at this point. And because the market's larger, the price is much more stable. And so it's like those two variables, which are just a product of the market being large around gold, that's its advantage over Bitcoin at this point. So like that is far and away the best problem Bitcoin could have, is that it's young. It's like, well, when we're looking at Bitcoin, it's like we're looking at LeBron James when he was playing in high school. It's like, okay, this guy is going to be like the best player in the league far and away. He's just in high school right now. And that's what we're looking at with Bitcoin.
And one of the narratives that was going along last year was that it was not exciting anymore. It was too stable. Volatility had gone by the wayside and was moving along with Meta and Amazon, the volatility profile. Well, that's changed just this last week or so, as we've seen about 20% be shaved off of the market cap of Bitcoin. But you said that slow volatility will lead to a suddenly moment, right? Where are we now in the volatility profile of Bitcoin?
Well, it definitely increased this past week. But like, that's what we expect. We expect to see it oscillate. The question is, what's like the linear trend? And the linear trend over the past decade has been a downtrend with oscillations around it. So this is an oscillation that we're seeing. I think in 6 to 9 months from now, depending on what happens with the price and the volatility, it can still very much be like that boring asset that's gradually moving. We'll have to wait and see how that happens. But I don't think that this is like necessary. It's not helpful to the narrative, but I don't think it is something that has, disarmed the narrative either.
And then you say the potential upsides for Bitcoin include nation state adoption and mega cap companies allocating to Bitcoin. We saw a huge uptake of DATs over 2025, but not so much the nation state adoption. Do you think that nation states will take the charge up here in 2026 looking for a neutral reserve asset?
I expect the next major wave of capital allocation to be coming in from nation states. I think that when you look at the geopolitical environment for the reasons I was describing before, it only makes more and more sense that you would want to start using something like Bitcoin. And whether that's more top down, or whether that's something that's more bottom up through smaller countries, as we've witnessed, it doesn't matter as much to me. I think it comes from both angles for different reasons, and I'm expecting more announcements like that to be happening in the near term. I think one of the big shifts that has happened now is that because there's more institutional capital that's participating in the market than in prior cycles, they look at price declines very differently than how retail does. And I think that, what I've been on record saying from the last bull market is that we wouldn't see more than like a 50% drawdown in the price of Bitcoin. So it looks like we're going to get real close to that number. And I think that's huge. Like the distinction between a 50% drawdown, like if we bottom at say 58,000, the difference between that versus an 80% drawdown is a completely different market. And I think that that factor is largely going to be driven by institutional drivers who are like, no, we made a long-term decision to have an allocation towards Bitcoin, and we will see this as a buying opportunity, as opposed to like retail that starts, having a lot of fear and took on too much leverage and starts, blowing out the bottom.
Yeah, and retail hasn't been as active in this market, and you point that out, and that they've been distracted by things like sports gambling. Do you think that sports gambling has in prediction markets have stolen some of the mind share from Bitcoin over the last year?
I don't think that's stolen any of the mind share. I think it's stolen some of the volatility, so that's good. I think Bitcoin owners are becoming more sophisticated, and I think that's a good thing. I think retail will come back, but I do prefer that these things have like shifted. I think that, it started with like crypto primarily in the 2017 cycle. And then with all the L1s, and then there was like the crypto DeFi cycle of volatility. And then during this prior market, it was like the meme coins. And then now that's shifted towards the Bitcoin Treasury companies. And there's always a new high leverage, like kind of gambling angle for the market to exist in. It's slowly, I think, shifted, or not shifted, but exacerbated to different ends of the spectrum. So it's like at least we have gamblers that are gambling on companies that are buying Bitcoin with higher leverage.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video.
The nice thing is like in our report from 2024, we predicted that we would see a lot more leverage come into the Bitcoin Treasury market than ultimately what happened. And it would be able, like more companies would be able to raise debt. And the reality is that very few of them were actually capable of doing that. And we kind of saw a degradation in terms, not within the actual debt, but actually moving down the capital structure from debt to preferred equity. And that's a key point that we call out in the report. Preferred equity is a more expensive source of capital to a company. Like they would prefer cheaper debt. But I think that that's something that also gives these companies more leeway through the volatility. And so that's a good thing because we predicted there'd be a lot more debt and that there would be some sort of washout that happens during the next major price decline. And really, there just wasn't that much debt that they ever were capable of raising. And because of that, there's just not as much leverage in the system through those as you would expect. Saylor's not going to get called on any of it anytime soon. He structured the preferred equity to be able to manage situations like this, and they have plenty of runway. And a lot of the other companies just weren't capable of raising enough to put themselves in too much risk. So that's not a major concern.
And since they didn't raise debt, do you think that means that they can wait out a Bitcoin bear, that they'll be able to survive and come out the other end and wait for a price to go back up?
Yeah, exactly. I think that's like kind of the point is that like why does one on the spectrum of capital, right? Like you have fully secured fixed debt at one end of the spectrum, it's like the lowest risk, but you're leveraging yourself in a very fixed manner. And at the other end of the spectrum, you have equity where you have complete control. You can do whatever the hell you want, but it's the most expensive. So you have cheap, more secured, and then you have more optionality, but the most expensive. So the preferred equity strategy is one step up. Not as expensive as complete equity. And still provides you optionality that like being in this debt category doesn't quite constrain or that does constrain you to. So that allows them to wait things out, and that's a good thing.
Mm-hmm. And with the shift away from retail and towards the institutional, there's been lots of talk of Bitcoin price suppression, paper games, a lot of these covered call plays creating a artificial supply of Bitcoin in the market. Do you think there's some truth in that?
I don't really follow the derivatives markets and like some of the market structure behind it. So I don't know. We know that historically things like this have happened. So without looking into it, I wouldn't doubt it.
Yeah. And then you mentioned it before, but the gold rotation, do you think that there's any specific pivot moment where that could make Bitcoin a lot more alluring than gold? I think JP Morgan came out this morning and said that the risk to reward ratio on Bitcoin is much better than gold at this moment.
Yeah, it's exactly right. Yeah, it's just look at the ratio. It's like there's going to be some sort of mean reversion, and that's how what JP Morgan's saying is exactly how an institution's thinking about this. So just like, okay, but gold's been on this parabolic rally. Bitcoin's dropping off. I think that like it's sucked a lot of the wind out of the sails of Bitcoin, and then now it's like, what's the most logical thing? I would rotate. The risk adjusted benefit of getting into Bitcoin at this point is just so much greater than like continuing to bet on a parabolic run to go up in gold. Put all else equal, and even if some very small percentage of the gold market makes that rotation, that impacts the price of Bitcoin marginally far greater, and that could be big. That's why I'm excited when it's like gold's running up. It's like, yeah, it might be sucking the wind out of the sails of Bitcoin in the short term, but all it's doing is creating a market size that's so much greater so that if like 1% of that market goes into Bitcoin, it can move the Bitcoin market drastically. Like the crash in gold, I can't remember what the precise numbers were, but I know that like this recent crash in the gold market was like on a market capitalization standpoint, like the entire size of the Bitcoin market. So these numbers are big.
They are. And another big number is the amount of money that millennials and Gen X are about to inherit. They talk about this in regular TradFi media a bunch, but not so much in Bitcoin circles. And you believe that the amount of money that's about to be inherited by our generation is going to push Bitcoin forward. Tell us more.
Yeah, so that was like one of the more novel things out of this report that we were looking at, where if you look at like these inheritance populations and what they own and how that's transferring to a new set of decision makers in the next generation over the next decade or two. These amounts of money are massive. They're so big, it's not even worth talking about. And then the key distinction is that so much of this inheritance over the next decade is going to be flowing to the millennial generation. And in the millennial generation, far and away, has a much larger percentage of savings that they're putting into Bitcoin. So of like all of these flows, you can estimate that we're expecting you would probably see the way the world currently exists today, and I think this will be probably much different as it happens, but we're expecting that like 3 to 5% of those flows are money that would be reallocated away from primarily the savings vehicle of the boomers, the real estate, into Bitcoin. And there's companies that are providing that directly for users now, where it's like, you have equity in a home, we will swap and get some of that real estate exposure and then give you Bitcoin exposure instead through it. And like there's direct mechanisms for people to take that, because like that's what a lot of the inheritance is going to be for the millennial class, and them starting to like swap that into a Bitcoin exposure. It's they're very large numbers, and that can impact the Bitcoin price drastically.
And will this lead to the demonetization of real estate in America?
Yeah, it's a good question. I think it's definitely it's an incremental move towards that. But I think that that's going to take time. So much of the monetization of real estate is driven by federally subsidized tax benefits and debt in the system. So until that really stops, then real estate is going to continue to be, artificially subsidized to be a savings vehicle for people.
And then when we look at the mega cap companies getting into Bitcoin, you say that they'll do it in a much more conservative way than we've seen with DATs, correct? Going through dividends or buybacks. How will some of the biggest companies in the world start participating in the Bitcoin market?
Yeah, it's a good question. I don't think there's like a great consistent answer for it, other than I think they'll do it for similar reasons that other companies have done it. It's a high growth asset for long-term savings that is, fundamentally insulated from geopolitical variables, indirectly insulated in its market, or indirectly influenced in its market price by those variables still. But nonetheless, it's something that you can own and control yourself, and it acts as a savings vehicle. And, we've seen already large companies that have done this. I think that as we go through these cycles where Bitcoin on the balance sheet is something that benefits your marketing and your stock price, that we'll see it more. So like when Bitcoin's down right now, it's not going to be happening much. But when Bitcoin goes back up, like you can guarantee that somebody else is going to take the Steak and Shake playbook, for example. Like that was huge for Steak and Shake over the past year in terms of how much it grew their sales, how much like free new marketing they were getting from Bitcoiners. And I think we'll see more companies want to do that over time. What I think could be interesting is while the current incumbent big tech may be more resistant to making a move like this just because they're so large and it's hard to turn a tanker. But I think the new class of big tech that's emerging within AI. I think there could be a very large a situation where there's an AI company that becomes, in the top 10 tech companies, and they have a very heavy exposure to Bitcoin. And I think we're going to start witnessing that because so much of AI is going to be associated with self-sovereignty, people running their own home servers, having control over their own data. It's creating kind of like a 10x benefit to actually controlling things yourself, and running these open source models that are starting to converge towards a lot of the closed source models. We could have an era of like many people running their own personal hardware because it has so many benefits, and that's something that sets the stage perfectly for something like Bitcoin. And I suspect that there's going to be a large consumer base that they're supporting through these companies that enjoy Bitcoin, and having adoption of Bitcoin at the corporate level is going to be valuable to them.
Speaking of people running their own hardware and software, have you been staying on top of this Claude bot phenomenon?
Oh yeah.
Are you using it?
I've been skeptical of AI for the past few years, not in the perspective of more the time horizon towards its growth and what's interesting about it. And I think like there's always been the vision. There's always been the vision of we're going to get Jarvis in Iron Man at some point. And like all that means is we're going to have an operating system level AI native resource. And like kind of in the back of my mind, I've thought about that happening from the perspective of, okay, one of the major AI companies is going to build its own operating system. People aren't going to use Mac or Windows anymore. They're going to rapidly shift over to like the AI native operating system that has all the bells and whistles to keep it secure, et cetera. And what we're kind of witnessing is the larger ones, they're creating an overlay of AI on the operating systems. And the surprise was Claudebot comes out of nowhere, and an open source dev just says, here, give it root access. And, we haven't thought through any of this, but it's going to go viral because of everything it can do and the security implications. If you go to my page, like I've retweeted some articles talking about a lot of like the security issues with running this thing. But I am running one. I'm not running it the way other people are because it's just so easy to get prompt injected hacked at this point, and like when it's interacting with the internet. And I like that's going to happen to a lot of people, and there's going to be a lot of things that are learned, and this is like a big testing market, but a lot of people are going to get totally screwed from running this. But nonetheless, like this is that inflection point where people are truly seeing the power of taking an LLM and giving it root access to all your file folders in your computers. It's like it can operate everything that I own. So now we have all these trade-offs to consider between security and utility of that, and what are the operations, what are the best practices, what software needs to be built to allow people to have both. How do we have both the security and the utility of that type of a system? And there's more, there's certainly like steps that can be taken with running something like a Claude bot today that are very low-hanging fruit and will drastically benefit your security that a lot of people who are implementing this are not doing. But I think we're at an inflection point. Like I think this is the inflection point. This is changing a lot of things, and I feel like we're now starting to truly enter like an AI native future, and that's gonna change the way consumer behavior works in so many different dimensions. You can talk all day about it.
Do you think it makes sense for these bots to use Bitcoin as their native money?
Yeah, I've been tweeting a lot about that. So yes, I do. I think that the primary reason is that agents do not work well on the current internet because they need credentials. And giving them credentials is a huge point of friction. Whereas like any sort of protocol or system that does not require credentials is like a very agent friendly protocol or system. It's something that's very easy for them to operate in, and you don't have to worry about them solving a CAPTCHA or like having like bot activity associated with it. So now that obviously has negative effects to it as well, because there's bad bot activity. But for like people that legitimately are using agents in a way to productively benefit their lifestyle, then being able to operate within protocols that have that benefit is going to be very valuable. Now, you can argue that stablecoins are something that will be very valuable to agents, which is true. Like you can today at least operate through like a US based ISP with a stablecoin and not have to provide credentials to doing a lot of that if you go through like DeFi systems. I don't suspect that that's going to last for that long because stablecoins are centralized. They like owning a stablecoin is not owning final settlement of a U.S. Federal Reserve liability, and because of that, that means blacklists can be implemented. You know, Tether is the vast majority of the market, and then USDC is pretty much the rest, and they have blacklists that they prevent. So there could be an agent blacklist that emerges at some point, and I think that that can impact stablecoins significantly. Whereas with Bitcoin, Bitcoin requires no credentials. It's very simple. Like people are spinning up Bitcoin wallets on their agents right now, and it doesn't require any credentials. It has no connections to the traditional system, and like that's the key distinction. Putting away like AIs aren't necessarily thinking in terms of all the monetary benefits as much as they're thinking about who will accept this and how do I get it, and that's from like a user standpoint who's controlling the agent and saying like, oh well, it's going to be a lot easier for us to do this with something that has no connections to anything, and you can bet that a lot of the activity amongst agents is going to be things that you know people aren't going to want to be worried about a blacklisting for. So the I think that there's a very strong case for Bitcoin. There's also a case for stablecoins, but I think the long-term case is that an internet native currency like Bitcoin is going to make a lot more sense for something like agents to be using. And I could see it as like a very major form of adoption in the near term. And it could be a major catalyst. And I think the second that like, it's going to be incredibly interesting to see when humans actually have to be bargaining with agents and how that trade is ultimately going to work. Because to like clarify that point, what's going to drive like medium of exchange adoption for Bitcoin, people are always like, people are never going to want to use it. Nobody's going to want to spend their Bitcoin. It's scarce. It goes up in value. And it's like, well, yeah, I don't want to spend my dollars either. I'd rather give you something worthless. I would rather give you loose leaf paper. There's a ton of things I'd rather give you in exchange that are relatively less valuable than Bitcoin and for dollar denominated assets. But that's not how trade works. Trade comes from, well, what do people demand you pay them in? And I think that we will start to see an economy emerge where the demand for payment in Bitcoin, that's what's going to drive a lot of the medium of exchange adoption. We're going to like in meat space, we're seeing that with Square terminals, and it's a more efficient network. And the current system with Square has very high fees for credit card payments because credit cards are this oligopoly. And so rather than paying 2.5%, every merchant says, well, we could do that Bitcoin payment over Cash App at zero fee. So like, don't be surprised when your merchant is saying like, we'll give you a 1% discount if you pay in Bitcoin, and download Cash App or something and do it over Bitcoin. And I think that that's going to be like, it's like a pull. They're going to pull people into payments with Bitcoin. And I see like agentic Bitcoin payments as like another avenue where that could be potentially happening, where it's like, okay, so for our system, it's a lot easier for us to use this native currency. So we're going to prefer that to something that, is going to require credentials for us to spend.
100%. And if AI is going to be a catalyst for agentic Bitcoin usage, and that's the brave new technological world we enter into, we also need to talk about the other side of the upcoming tech, and that is quantum. So you've got like just a 2-page snippet here in the report. Did you write this one?
Yeah, that's me.
Yeah, I could tell. So very straight to the point. And I would love for you to share your outlook on quantum at the moment and why you don't think people should be shaking in their boots about it.
Yeah, like I think the big thing with quantum is that people all there's been all of these okay, I'll take a step back. So the reason that people are getting concerned about quantum is that there are driving factors that have changed recently, driving factors of quantum computing's potential to have a quantum like a cryptographically relevant form of quantum computing, and that means that the computing is good enough to where it can actually attack modern cryptographic systems. Not even modern, just any sort of cryptographic system. And like the reality behind a lot of that is that the drivers, you need them to lead to some sort of outcome. So the drivers of these things have been, well, experts in the industry are saying that we're learning a lot more, and that these drivers of progression, like some of the components within quantum computing of the amount of qubits of production or logical qubits, and when those variables are increasing, they're saying, okay, so those could lead to better factoring of prime numbers, because that's the goal of a quantum computer, at least as it relates to making calculations that could crack modern cryptographic systems, is that it needs to factor larger and larger prime numbers. And the logical qubits is the primary driver of that happening. People are saying, okay, well, these things have been increasing over time, and not even just logical, but like more broadly, just qubits in general. That's been the primary that's been increasing. And so like physical qubits is the main thing that we're looking at that's increased. And we're also seeing that error rates have been declining, and error rates declining is another key metric. And this is kind of one of the, like potentially existential issues for quantum computing, is that like error rates scale exponentially with the number of qubits within the system. So what that means is the bigger problems you try to solve, the greater your error rates are increasing. So like that could be an existential issue for quantum computing that they never solve. And like, so, but right now they're saying, okay, so physical qubits are increasing and error rates are declining. And experts are concerned that this pace is going to increase. Not concerned, they're excited that this pace is going to increase, and quantum computing is going to be a game changer in the next few years. What does that mean in terms of the reality? Well, the reality comes down to, can they factor large numbers? Do these drivers that we believe in actually lead towards real outcomes that we can observe? And the reality is that they don't. And that's what led me towards being against this whole very hyperbolic narrative that quantum computing's coming, and it's coming rapidly, is that in many areas of work I've been in, I've dealt with a lot of intelligent experts who have been just patently wrong about things for extended periods of time. And the reality is that people are very wrong about predicting the future all the time. And until you can really get observable change within something, it's hard to say what's actually happening. So there's plenty of experts that are looking at these rates, and they're looking at leading factors, and they could very well be right that these changes are occurring rapidly. But to really say that progress has been happening, you have to see that these things can factor prime numbers that are larger, and they haven't been able to factor a prime number greater than 15. That's the main thing, is that we're just not seeing progress in that. So it's like, okay, let's see some progress in that. And like maybe they're factoring a prime number in the hundreds, or maybe they are getting close to being able to break like very early low grade forms of cryptography. And it's like, when we get to that point, now we can say, okay, we're probably getting closer to some sort of horizon when that can happen. But we just haven't like seen that yet. And the way that this concern has been being postured is, they're calling it like Nevin's law, where like that states that computational, like the power of computations of a quantum computer increases at this like doubly exponential rate relative to like a classical computer. So they're saying that like the curve of change is just going to be so much more rapid with these. And like, if that's true, then they think that it could break Bitcoin's cryptography within 5 years. So they kind of like equate this to like Moore's law within classical computing. But the reality is that Moore's law, it's not like a law. It's just something that we kind of observed happen over time. and like if you think about Nevin's law, it's like we literally aren't observing that. Like that isn't happening. Whereas like we did observe Moore's law happen. So that makes you just really skeptical of all of these expert projections, and it's just kind of like, I don't know. People thought the world was going to end from all these expert projections of climate change for like, I think we were supposed to end in like the 90s or something. And the reality is that a lot of these things are true. And then you can kind of get into the incentives of like, okay, well, what are the motivations? And it's like a lot of these people are raising money right now. So, they do have a motivation to want to fearmonger about quantum computing. And that's fine. That'll always exist. But you start to pair it with some of the motivations and you start to see like, okay, so when you look at the facts, when you look at the progress, this isn't something that merits any sort of existential risk to the Bitcoin. And it's probably not even something that should be a primary focus. And the reality is that people don't understand that yet. And the way that people would push back in the community is they'd say, okay, well, a lot of institutional capital cares about this. And while I've had my anecdotal conversations and I have a limited scope of how I'm really viewing what institutional capital views as being critical, it's not a relevant reason to try to change Bitcoin. Institutional capital has had a litany of completely retarded views on Bitcoin over the years. And we haven't cared, and that's benefited Bitcoin. So yeah, I mean, all this, if they're selling off right now because of quantum computing, like good, like that's cheap Bitcoin for us. They're idiots. And we're going to be just fine if the investment community has to sit around for the next 3 years, watch Bitcoin go back up in price, realize quantum computing is not breaking it, and then they pay a higher price for it. So like I don't view that as like a strong argument for us to want to care too much. What is a strong argument is that it's a worthy conversation to have. It's something that we should be digging into, that we are digging into. And I think like people that are fudding quantum are overlooking a lot of the progress that the Bitcoin developer community has been making and has been proposing. I have some links to that in our report. And go read the Chain Code Labs research, which is very technical and very detailed. Like there's a lot of people that are looking at this in Bitcoin right now and have been for some time. BIP 360 is the current proposal that's being worked on for a solution. And even if we assume worst case scenario, and I'm dead wrong about all this, and some crazy exponential growth rate happens within quantum computing, and we're factoring large enough prime numbers to be able to, break these, Bitcoin's forms of cryptography of the ECDSA. And if that happens, then we still have like doomsday scenarios within Taproot signatures where we can, create short-term solutions to protect coins from being stolen from a quantum computer. And I won't go into those details, but it's like we have even like doomsday scenarios. But what I think is reasonable is let's have an improvement proposal that emerges in the next few years. And that creates like a short-term versus long-term solution to where we can create an avenue that's not an ideal long-term solution, but gives us a short-term option if we're wrong. And that's what Chain Code Labs kind of proposes. And then we can, within the next decade, come up with a better solution. And it's going to take us years to get this through. Like the biggest risk is Bitcoin consensus. But like, I'm not concerned at all that if we do see a legitimate, observable threat of quantum computing progression, that it would be in the best interests of all stakeholders of the Bitcoin network to institute a quantum resistant signature algorithm within a soft fork. And because of that, it's not like a concern to me. It's just like, obviously it would be in alignment with the interests of all the stakeholders. I think the reason that it's not today is because we haven't seen a quantum computer factor a number greater than 15.
Yeah, there's so much to dive into with this subject alone, but I think you make a good point that it would be a much bigger problem for us to jump into a solution that isn't optimal than to take our time and figure out what is actually going on firsthand.
Yeah, that's exactly right. Like that's one of the biggest risks too for us moving too quickly is that there are new quantum resistant signatures that are more efficient that are being created and worked on. Like the biggest risk I see happening is that we end up adopting a less than optimal signature too early on quantum. Whereas if we wait the next 5 years and like see what happens in the market, we could make a much better decision that has much less material trade-offs to Bitcoin for adopting that type of signature scheme by being patient.
And I want to get into what you look for in terms of Bitcoin businesses. But before we get there, let's talk about the media perception of Bitcoin and how Bitcoin is perceived by the outside world, because we are sort of in an echo chamber to some extent, and we don't really know how the rest of the world views us. So what do the reports say in that regard?
Yeah, I mean, the biggest thing is that we have this large gap in perception between people who, go to Bitcoin conferences, listen to Bitcoin podcasts, and then people who learn about Bitcoin and understand it from mainstream media. And we worked on, so this section was written by our friend Fernando, who used to run marketing for Blockstream and now has a really cool website called perception.to. And he's just plugged into all these different media channels and sources and accumulates a bunch of metadata on that. And he's kind of like monitoring narratives around Bitcoin to see like who's perceiving it and how. So I would definitely go check out his website if you want like more details on some of this stuff. But we did like an annual review section that he ran. And we put together a bunch of numbers on all of this to say, like, how do we quantify this perception gap between the mainstream? And a lot of it comes from, like, what is the positive versus negative sentiment within each channel? So in our world, like the positive view is very high, and in mainstream it's actually a lot less, and it creates this like huge gap into how we perceive things. So like a lot of us are like, okay, well, I've been listening to Bitcoin podcasts all week and I don't understand why its price is going down, whereas there's some finance bro who works for an asset manager that just maybe reduced half of their Bitcoin allocation because they think quantum computing is going to destroy it or something.
And another interesting tidbit from that media section is how it took us 3 years, but we defeated the environmental FUD about Bitcoin.
Yeah.
And now we need to defeat the crime FUD.
That's right. Yeah, we think it's going to be shifting into that. But that's like the coolest thing that I think we should be celebrating is the amount of times, 4 or 5 years ago when I would be talking to some random person about Bitcoin and they'd be like, oh, well, isn't it like horrible for the environment? And it was always my favorite like criticism or question to get because it's the easiest one to dunk on because the arguments are so strong and because it's actually such a major positive for the environment and such a positive enabler of renewable energy. And like that's what we should be celebrating is basically mainstream media created this source of FUD that was funded by the pockets of like Greenpeace and all these other people. And the community banded together and produced its own arguments and its own forms of data that were accumulated over years. And we actually not only created a counter argument that completely destroyed the FUD, but we created one of the most positive narratives for Bitcoin adoption from that process. And that's pretty sweet. That's something we should celebrate.
Yes, Greenpeace was thoroughly defeated. Them and along with Elizabeth Warren. So we can rest on that. That's a great win for us. So you as a VC are looking at Bitcoin companies, who to invest in, what kind of ideas are worth your time and money. What kind of businesses are going to win in 2026 moving forward for Bitcoin?
So for us, it's like businesses don't like win within a year, right? Like our businesses will win over 5 to 10 years because we're investing very early within companies. So we're investing in an idea, we're investing in a group of founders that we believe in, and we're trying to give them all the right resources that they need to be able to execute on this plan. What I think is interesting, in like the medium term, like one of the things that we look at is what we kind of call them like last mile type businesses. So when you're building a company, there's like the easy low hanging fruit things that you can do. And to give an example of this, if you're a Bitcoin company and you're like, we know that Bitcoin is more efficient for cross-border payments. there's like the easy solution where you say like, okay, we can move money cross border using Bitcoin instead of using like, a wire system through Swift. And that's more efficient and that's like more competitive than using TransferWise or some of these other companies. And we can do it more cheaply. And we're going to have, and then there's like, okay, well, the problem is that people don't actually want to use the Bitcoin for most of these use cases today. They want either a domestic currency or they want dollars. It's like, okay, so now we have to get bank accounts in the US and then we got to get a bank account in the foreign country that we're remitting the payments to. And we got to be able to get it so that they can off ramp into bank accounts. And it's like, okay, cool. So that works. A lot of people can do that. And that's valuable and people are doing that today. And then you realize like, okay, so a lot of these remittance payment type demographics around the world, these are a lot of the people that they're sending money home to don't have a bank account. And a lot of these markets operate on cash. And it's like, oh shit, okay, so this bank account model works for some people, but not all people. So how do we get it to the rest of the people in cash? And like one of our portfolio companies, Guap, is doing that on the island of Trinidad, where they're building out like ATMs that are directly providing domestic currency. And they're kind of like empowering the local economy because they're creating like an Uber model for that, where people who have domestic currency that want to save in like dollars or Bitcoin, they'll like run an ATM and they'll put, their domestic currency and it's an off ramp to people locally. And then they'll take the other side of that trade, which is the amount of Bitcoin or dollars that's being sent from abroad. And like, that's like a last mile business that's creating this kind of new model to enable cross-border payments and still be off-ramping people in the way that they do it. And that's like hard because it's very hard to build that. It's a lot easier to say like, we want to go set up bank accounts for people or we want to give them a Bitcoin wallet. But we like the idea of going after where it's hard because there's not as much competition in those areas. And oftentimes it's really what people need the most and where the majority of like the innovation can come from. Like that's kind of, that's one of the interesting things. I think like other things are, like a hot topic over the past year has been like heat reuse within Bitcoin mining. And that's a super interesting industry to us. And I think that there's a lot of big ideas that'll come from it. But I think today a lot of the actual execution of it needs to be figured out. And it's a lot more complicated than you would think. The supply chain to build some types of companies like this, the ability to actually distribute it, the ability to service it. There's all these different questions that haven't really been answered well yet for how to do that type of a business at scale. But I expect that a lot of these problems are going to get solved, and we like looking at companies that are trying to solve those problems. Bitcoin asset management, I think, is an area that's going to grow pretty significantly, particularly as we see Treasury companies come out. Like one area in the report that we touched on is in the Treasury companies. When you look at the expenses that they're charging you to run their Bitcoin Treasury strategy, like some of these are horribly expensive and you should not buy them because they're so expensive. And then some of these are a lot cheaper. And the only one that is actually not an expense, but is actually paying for itself is MetaPlanet, because they're paying for their salaries and earning a Bitcoin yield from asset management that they're providing on their Bitcoin stack directly. So it's like, cool, you guys are actually an asset manager, and that's really valuable. So we think like more people that have Bitcoin treasuries are going to need more asset management services related to it. And that's kind of like an interesting area that we're looking at. There's a lot more I could talk through, but those are kind of ones.
And in general, when you are looking for companies to invest in, where are you seeing new founders pop out of? Are they American? Are they around the world? And what kind of traits do you look for in a founder when you're investing in a Bitcoin business?
Yeah, I mean, it's super global. That's like one of the unique things about Bitcoin is how global of an industry it is. And it's cool. And it definitely gives us like, there's certain things where one company may not make sense in one country, but makes a lot more sense within another country. So it's cool. We're looking at businesses all over the world. We're US based, so we're like kind of primarily targeting this region, but we're looking at foreign companies all the time. In terms of founders, what we're looking for is like, you don't want to necessarily like generalize too many characteristics, because different types of businesses require very different types of people. We want people that have like the right motivations for what they're trying to accomplish. And like that's when you're investing in an early stage company, the plan changes all the time. That's like the only guarantee is that, you know, your plan is going to change very significantly. And like, while we might like the idea, we could be investing in something that becomes a very different idea within the next few years. So the question comes down to like the judgment of the founder and making that assessment and pulling that off. And for that to happen, we have to trust the judgment of our founders, and much of that comes down to, do we trust how they're motivated and what their incentives are? And so if you're doing things for the right reasons, and you have the right like incentive alignment, then that is a formula that can lead to a profitable company being built over the long term. And you know, you have to have the grit, and you have to have the intelligence, and you have to have the resources. Like resourcefulness is really important. Being able to create nothing out of something is a really valuable skill when you're starting something in the early days. And yeah, so we're looking for all like the positive characteristics, but that also matters in terms of the team that you put together too, because you're not just one person, there's a bunch of different people. And you know, how complementary are the skill sets? What's the experience level? And do they have the relevant experience and complementary skill sets amongst each other to execute on this plan that they're talking about? Or at least being able to execute on a bunch of different plans that they might be moving into.
Well, that's just scratching the surface of this amazing report that you put together. But to close the conversation, you made a list of 2026 predictions. Give us the one you're most confident in and the one you think that would most surprise people.
Ooh, most confident in. I think, let me look at these puppies. I think I'll give a shout out to BitChat. I think that they're going to go a lot more mainstream. And we said that, you know, BitChat's probably going to drive over 200 eCash mints to grow this year. And I definitely think that's going to happen.
Very nice. Yes. I mean, from Nepal to Uganda. And hopefully here next, BitChat is exploding in popularity because of need more so than coolness. And that's when tech really takes off. So good bet on BitChat. And they're also expanding the length in which you can, the distance between BitChat users. So it's becoming more and more useful. Amazing technology. Freedom tech. That's why we're here, right?
Yep.
All right, Eric. Well, I very much appreciate your time. This has been a great conversation. If people want to find out more about you and your VC, where should they go?
Yeah, you just follow me on Twitter. All my links are on my profile. It's at my full name, Eric Yakes. And yeah, follow me there. You'll find links in my profile.
All right. Well, Bitcoin might have bottomed while we just had this conversation, but here's to a prosperous and fruitful 2026.
Cheers, man. Thank you.
Cheers. Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.